Hi and welcome back to Cheeky Crypto. My name is Nick, and as you can see, guys, we have an increase in the amount of Bitcoin going on to the exchanges. Just a few days ago, we were talking about 24,000 Bitcoin staying on the exchanges since the 1st of January 2023, and now we see 31,000. This is in consideration of all the inflows and the outflows that have occurred since the 1st of January 2023. Now, 31,092 or 31.92 thousand, it isn't a lot of Bitcoin. It's close to the 32,000. It's still, it seems like a lot, but actually on the grander scheme of things, it isn't actually that much. It's pretty neutral, but it is swinging slightly more in the bearish side of things. Yesterday, we did see a few interesting developments in terms of the inflows and the outflows and the amount of Bitcoin kind of moving towards the exchanges. Now, if we take a look at the inflows and the outflows since the 1st of January, we can see that we've had 3.1746 million going onto the exchanges and 3.1427 million coming off the exchanges. So you can see how we've had slightly more in the way of inflows than we have on the outflow side of things. And the volume's obviously decreasing over time, and this is pretty common when we see that the fact that the move to the upside really hasn't been backed by much. Now, when we take a look at this in contrast to the 1st of January 2019 through to the 19th of April 2019, so the same time period for comparisons, we can of course acknowledge that yes, very similarly, we have a similar setup, but we are about 2 million Bitcoin short. Now, there was a really good question down in our Discord server from one of our Discord members who was basically arguing that because the price action of a Bitcoin is so much higher now than it was back in 2019, that could explain why we have lower volumes. And I've spoken about this a couple times before, and I do want to kind of just talk about it briefly here once again. And this is something that a lot of retail investors want to kind of try to do. They want to kind of take a look at the market, and they want to explain why the data looks a certain way that still supports the idea that you're moving in an upward direction. Okay, it's not the fault of a retail investor. It's just the mindset of how retail investors look at data and look at the markets as a lot more emotional driven than it is from a logical data-driven point of view. And this is something that myself will obviously struggle with occasionally, because I do want us to be in a bullish market. I do want to kind of explain away these bearish tells. However, the analyst part of me just wants to kind of tell the data as it is, and so that's kind of where we kind of land on this channel. Occasionally, I might let some of the bias set in, but I try to avoid that the best I can. So back to the question: why, or do we think that Bitcoin is a lower volume because of the price action? And I want to kind of use a bit of an analogy here. Let's hypothetically say in the previous bullish market, you invested $1,000. And during that bull market, you were able to turn that $1,000 into $50,000, right? So you have an extra $49,000. What do you do as a retail investor? Right? You've withdrawn $50,000, you've made 49K profit. In the next bullish market, are you investing the same $1,000? Or are you now maybe investing $10,000, $20,000, right? And you're going to multiply it out massively that way. And the reason that I ask this question is it's something that you're going to have to answer for yourself, right? I'll ask the question and you guys can answer it. Let me know what your thoughts are in the comments below. Would you be investing the same $1,000 and pocket the 49K that you've made? Or are you going to scale up with your newfound funds, right? Are you going to be investing $10,000, for example, and therefore you're actually going to see 9 times more in the next bullish market, right? And these are the things that you're going to have to kind of consider. Now, back to the question, which is, are we seeing less volume now because of the price action? And I kind of go back to that analogy. These are people who have already invested in Bitcoin, have seen significant gains. They're not going to invest the same amount in Bitcoin. They're going to scale it, at least in my opinion. They're going to scale with the funds that they have available. Okay, 10% of, let's say, your portfolio in the previous bull market might have been 1,000, but 10% of your portfolio here in 2023 might be 10,000 or 20,000 or 30,000, right? And so we look at it from a percentage point of view. You kind of remove that kind of bias of understanding the dollar value of something versus the percentage value of something. And so the aim of everything in terms of investing is to build your wealth, right? And you want to be investing on a percentage-based terms rather than dollars-based terms. If you're always thinking about dollars, then you potentially are going to be doing yourself a disservice. At least that's my thought and opinion on it. So it's a good question. It's a question that comes up from time to time. And again, these things happen because there's a lot of retail investors that are, looking at the markets and trying to explain why data is a certain way while still trying to support what their own bias is, which is a bullish market, at least at the moment. So when we take a look at this, I do note that 2 million difference in Bitcoin is very significant. It's a very significant amount of Bitcoin, and it is also can't, at least in my opinion, can't be explained away by the price action of Bitcoin, because again, people are going to be scaling their portfolios, at least in my opinion, right, about creating and generating wealth. You do not stick to the same dollar value every single time. So thinking about it means that I can kind of assume, and I do assume, that the 2 million in Bitcoin volume is not a bullish sign. Okay, it is actually a sign that this is a weaker market than it was back in 2019, even though we have a very similar setups. Okay, so very important that we kind of take a look at the data and we kind of remove some of those biases and actually just take a look at it and try to be logical about why we're seeing lower volumes. Now, of course, when we see 5 million versus 3 million and all that kind of stuff, it's one way of kind of looking at the market, but it's not the be-all and end-all. I mean, it's important that we actually count in what is going on with the different participants, right? This is psychology seeping into the background data, and we know how we like psychology when it comes to Elliott wave theory. Very complicated subject matter, but very much something that I think is worthwhile diving into if you haven't done so already. Now, wallet counts are important because this shows us the behavior of different types of investors. Okay, so we have Bitcoin wallet count data, and this is all blockchain based. So you can query the blockchain and you can find out how many wallet addresses there are and how many wallets have a certain amount of Bitcoin in them, because it's traceable. This isn't something that people can hide. So when it comes to Bitcoin here, we can see that wallets that have over 0.01 Bitcoin is on the increase a little bit here. Okay, we are currently on 11,743,000. Okay, so we can see that there, but we were previously up here at 11,798,000, if I can get my words out. And so we can kind of see here that there was a little bit of a pullback and then they start to accumulate again. Okay, now these are the most vulnerable retail investors. They're the ones that have, in my opinion, are the most vulnerable retail investors. They've invested a bit into Bitcoin, and they are probably the ones that are going to have knee-jerk reactions to price movements, say over-emotional, expecting things to go to the moon instantaneously. There's also this thing that you see in the crypto space where a lot of people want like cheap prices, right? And they see price moving down, and the second that they buy, price is never allowed to go down again. They can only go up from there. And this is something that you see a lot in the comment sections where you might see a comment that says 30,000 Bitcoin. You'll never see it lower than that again, right? And this is because they've bought into it, and they kind of believe that it's never going down into those lows again. And it's kind of just a way of kind of trying to trick yourself into believing that you've done something correct, right? And you want to try to convince the world that you're on the right path. Doesn't necessarily make it true, but it's your belief system. So that's kind of where these wallets sit, in my opinion. They are the ones who are the most vulnerable. Once they buy it, the price connection can never go down. And if it does, then it's a scam and they're out. Okay, and so they overreact. They overreact in an emotional way. Now, when we go up into the next three sized wallets, again, these are all retail investors and they act differently when it comes to price action, but that's always emotionally driven. So we have Krill, which is basically a Bitcoin wallet that has over 0.1 Bitcoin, and you can see the level of FOMO here. Basically, we're in a bull market, we're never going down to $20,000 again, and we're going to the moon. So I'm going to just buy every single time I have an opportunity to do so. I am basically in Bitcoin to the moon. That's kind of the emotional response at the moment, right? And we're waiting to see these guys get shaken out. It hasn't happened yet, and I do think it is going to happen because, like all things good, you cannot go in an upward direction forever. There has to be natural corrections, and we've seen a little bit of that so far, and at the moment they are buying that, which is interesting. Now, the shrimps are people who have over 1 Bitcoin the 𝗕𝗏𝗀𝗃𝗀𝗪s, if you will. And now these particular wallets are also on a bit of an increase. They have a little bit more volatility to them because, again, they kind of overreact from time to time. And these are the ones that really I'm tracking quite heavily because these guys historically have a habit of selling towards the bottom of a market. And so far, these guys have only been accumulating during this entire bearish run. At some point, they will obviously sell. And we'll talk about why in just a moment. Now, over here on the dolphin side, the 10 Bitcoin or more, these are your high net worth individuals. Still, however, retail investors and overreact emotionally. You can see here, they kind of move back down, right? So we can see here, they started selling when Bitcoin's price was $28,000. And you can see they started buying when it was at $30,000. A very typical retail investor mentality. This is not the first time it happens. They bought over here, they sold here at $28,000, and then they started buying here at $28,000, right? And basically, they are selling. They're selling low and buying high. And of course, this is a retail approach to the markets. They're chasing the pumps and the dumps, and they're trying to understand, are we in a bull market? Are we not in a bull market? And ultimately, all three of these wallets are tied to some kind of emotional response. Sometimes there is a knee-jerk reaction. Sometimes they are just blindly following, a trend line or something to that effect. Now, when you kind of come out of this size wallets, anything greater than 100 Bitcoin, you start to see different patterns in the data. And this pattern in data starts to shift and becomes more about being more logical, being more analytical, and trading the space or utilizing liquidity in the space. So when we come up into these next wallets, you can quite clearly see a very different story. Okay, so the Bitcoin sharks are over 100 Bitcoin per wallet. And these guys have been aggressively coming out of their positions. But this isn't any just coincidence or some kind of random event that's occurred. This is very much something that had been planned in way in advance. And we can see that when we take a look at the 365-day view. Okay, so we can see that the November lows for these sharks came in, and they were aggressively accumulating, very aggressively accumulating. And we were saying at the time, they either know something that we do not know, or they're making a catastrophic mistake, because these guys, sharks, 100 Bitcoin or more, in my opinion, are just professional traders, and they're not always right. Sometimes they are catastrophically wrong. And in this particular case here, you can see that it did an absolute blinder and got this one absolutely correct. Buying this at the bottom here, scaling all the way up, and as price starts to pump up, and as liquidity starts to become a lot more available, as in there's a lot more people willing to sell, or a lot more people willing to buy, they can sell their Bitcoin to those buyers. And so they start to come on out until we hit $30,000, and then they decide they're going to come fully out, and they're now back down at these lows. Recently, they started to come back in, and again, there's going to be pockets of people who potentially are being knee-jerk reactions, looking for small pumps in the market, grabbing a little bit more liquidity, or making mistakes. Okay, so it's interesting to kind of see what's going on here. But they came in, they came out, and now they're starting to come back in. We can argue as to why and what is going on. Ultimately, they've been selling on this way to the upside. For them to come in and buy at the higher prices doesn't make a lot of logical sense, so still expect a move to the downside with these wallets and the particular people who are trading Bitcoin at that level. Now, if I come back into this wallet count, you can see that there's Bitcoin whales. These whales are over 1,000 Bitcoin per wallet. And again, you can see here they've been kind of, on this 90-day view anyway, kind of just bouncing around a little bit. But when we take a look at that on a 365-day view, we actually get the real picture, which is essentially that they've been coming out of their positions during this entire bearish market. Basically, people have been buying, and they whales here have been selling the Bitcoin to them. This is important because, as I said, when we were taking a look at our shrimp wallets, we need to explain what is going on and why I expect these people to sell. It comes down to the very fundamental basics of all markets. There's a buyer and there's a seller. And if we want to see these Bitcoin whales, okay, if I come back to that 365-day view, if we want to see Bitcoin whales coming into the space, which I think is something that we need to see if we want to see price action significantly moving to the upside, considering these are billionaires and institutional level investors, we need to see these guys coming in. In order for these guys to come in, someone has to sell Bitcoin to them. Okay, and who do you think that is likely to be? Historically speaking, it has been these shrimp players, these one Bitcoiners. You can see during this bear market, they accumulate in 2018, and then they start selling right into the actual bear market low. Okay, so it's important that we understand that where we are right now, if we take a look at the 365-day view for the shrimps, we can see all they've been doing is accumulating. They haven't yet sold their Bitcoin. And since they haven't sold it, the whales can't come in and buy it. Okay, so it's important that we understand there's a balance to be had here between buyers, sellers, and who is likely to be on the right side of a trade. Then, of course, we've got the 10,000 Bitcoin wallets. These are your institutional players, your market manipulators, just all round interesting folk. Now, they've come out aggressively here, bringing price action down to that $28,000 level. This is something that we could see within the psychology of Elliott wave theory that was going to unfold. We saw this a few days ago. Obviously, I got crucified because price action didn't immediately follow that price action, but we did actually see or that analysis, I should say, but we did actually see the move to the downside just yesterday. So we can see here that these guys are kind of interesting, right? It looks like they're accumulating. Now, again, if we take a look at the 365-day view for the 10,000 Bitcoin wallet holders, we can see that they've been accumulating during this bear market. And you might be thinking, well, that's incredibly bullish. And for the most part, you could argue that's correct. It is incredibly bullish until we kind of reflect what they did in the previous bearish market. In the previous bearish market, they did exactly the same thing. They accumulated during that entire bearish market right up until they wanted to bring in the actual bear market low, where they flooded the ecosystem or flooded the markets with excess Bitcoin. Now, this is actually a pretty common tactic that you see across some of the traditional spaces, whether that's Forex or stocks, where big funds decide to create ghost order books or orders in the order books. And essentially what I mean by this is they create these huge kind of sell orders or buy orders that trick retail investors into thinking that these are key levels that are going to either dump a price or pump a price. And when things get close, they pull their initial orders and go in the opposite direction, essentially meaning that all the retail money that kind of saw these things occurring start to actually go the other way. They get wrecked. Right? All that liquidity gets grabbed by the smart fund. So this is a tactic that's well known. It happens less these days than it ever used to, but we can't kid ourselves into thinking that it doesn't happen. And so what we see here is essentially, at least in my opinion, the same kind of scenario. They gather Bitcoin for one purpose, to flood that market and bring in the bear market lows and grab as much liquidity from retail investors as possible. There's no guarantee that this plays out. I want to be very clear about that. But if history does tend to repeat itself, and there's a lot of bullish people in the space who are saying that history repeats itself, well, if history repeats itself, then I'm going to submit this into evidence, because this, to me, if history is to repeat itself, is something that we have to take into consideration. If, of course, we throw the history book out the window, which is also possible, then this doesn't have to happen. But, of course, if we reflect on what's occurred so far, it's very similar in the way that these wallets and these particular individuals have been participating so far. But ultimately, in the fundamental side of things, there needs to be a buyer, there needs to be a seller, and at the moment the market only seems to be, or at least seemingly, propped up by retail investors. So not confident there. But let's take a look at the price action and what is going on. So here we have Bitcoin paired up with USDT on our daily chart, and Binance is our data source. And we can see this interesting kind of channel right in here. This is something that we were talking about for quite some time, actually more talking around it up here, where we were looking for a move to the downside. Now, is it a coincidence that we've tested this lower range? No, not in my opinion. This would be a trend line that a lot of people would probably be looking at anyway, and it happens to coincide with the channel if we were to kind of reflect on it this way. Now, this particular type of channel is unfortunately a bearish type of channel. Okay, if we just zoom out of this daily chart just for a moment, let's just pull everything into perspective here. We can see higher highs and higher lows have a tendency to break down. Higher highs, higher lows, down, higher highs, higher lows, down, and so forth, right? Whereas in our bullish market, lower lows and lower highs go up, lower lows and lower highs go up, right? So we can see that we have this bearish setup right here, but I don't think it's time just yet to see that move to the downside. Not fully. I expect some kind of move upwards first. Do I think that the $31,000 level is going to hold? It's definitely possible. I think it's going to be hard to push through it at this particular stage with some of the things that are unfolding on the smaller time frames. There's a potential scenario here that is unfolding that it could be seen as incredibly bearish. So we want to be a little bit cautious as to whether or not we can push past 31 and hit those 32, 33, or maybe even $35,000 levels. Ultimately, though, our setups are pretty bearish at this level. We do want to consider, though, that there is a momentum shift that has occurred. We are down here on this low side, and it's no coincidence that we're almost in an oversold area on our stochastic RSI as well. This basically shows us that we're likely to see some kind of relief rally to the upside, where we're probably going to be looking to test out around that kind of 29,900 or even $30,000 level. There's some interesting resistances right up in here as well, and we're currently finding support on these. If we were to kind of draw this in here, you can kind of see right here, this is no coincidence that this previous area of resistance could be turning into an area of support, and we could see a brief move to the upside. But do you kind of think of that as a brief move to the upside? As ultimately, I'm not confident in thinking that we are likely to move up unless, of course, things change on those smaller time frames. So ultimately, for Bitcoin right now, I think it's all to kind of play for. There's potential for some long positions, but ultimately, the macro view, specifically on those larger time frames like the weekly, are indicating to us that we have to move on down. Up here, we can see the previous support levels are turning into resistance levels, and we can see that we're heavily overbought on our stochastic RSI. So a move down to the previous area, specifically around that $24,000 to $25,000 on the weekly time frame, is something that I would seriously consider. Likewise, a potential move down in towards those $18,000 levels as well. If we take a look at this from a smart money concepts point of view, we can see that there are fair value gaps that have been left behind, and these do move down quite nicely into these lows. Now, there's still a possibility here that we don't have to have a new lower low, although I think there's a high probability that we do see one. And this is simply just because, like I said before, there's a buyer and a seller, and if we want to see the whales buying, are they going to be buying at a place that is higher than they were selling? They were selling down in November, all the way down here. In fact, they were selling all of this up here as well. So if they were selling down at the bottom, what's the chances are that they're going to buy at a higher price than where they sold? It's incredibly unlikely. So if we were to think of this as a smart money play, and ultimately all retail investors are being played like a fiddle, then we should probably consider that there's a high probability of a new lower low. Maybe brief, it might be 14K, might be 12K, might be sub $10,000. We don't know for certain, but there's some interesting things that are developing on some of these time frames when it comes to Bitcoin USDT pair. And I think these are important things that we cannot just blindly ignore. We've moved up pretty strongly, very similar setups to how 2019 went. Of course, we're low volume, and we have very different participants this time round than we had previously. Not only do we see these variables differences, we also know that the Fibonacci numbers in which we've retraced to previously have also changed very significantly from the previous bearish markets. We saw a 1.236 hold, and we saw a 1.382 collapse down in most recent markets. So we know that in the history of Bitcoin, we've been above the 1.236 in terms of retracement into a bear market low, and this time we've gone down lower than the 1.382. These are key differentials between how people are going to emotionally react to price movement. Being down lower than 1.236 is critically important in understanding that there is still a potential move to the downside over that of the 1.236. And for more, you're going to have to dive down deeper into the Fibonacci sequences if you really want to truly understand what I'm talking about there. There's too much to go on to in this particular video. But a 1.382 or lower is very important in understanding that the psychology of people is going to be reacting differently than the 1.236. And so since the previous bearish markets were 1.236 or higher, and this one is particularly lower than 1.382, we have to consider what that might mean for price action. It could be a much longer, drawn-out bear market that actually sees us going down lower than $10,000. And it might be crazy to many people to think of it like that, but it is unfortunately how I see the market at the moment. So there's lots of things to consider. There's lots of reasons as to why I'm bearish, and hopefully in this video I've explained as many of them as I possibly can. If you found this useful, informative, then smash that like button. I really do appreciate that. If you're new to the channel, subscribe. And of course, if you haven't yet joined us in Discord, you're missing a trick. Check it out, linked in the description down below. Until the next video though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All other videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.